Welcome back. Hope you're having a good morning. Well, we've listed on all the stocks that you should be tracking today. And Devin Choksi, Managing Director at DR Choksi FinServ, joins us on the show. Hi, Devin. Good morning. Let's get some fundamental analysis going, Devin. It's raining block deals. Let's talk about the largest. Indus Towers. The street had a hint for the last few sessions that this could be the case. Now we understand that close to around 18% of Vodafone's stake in Indus Towers will be coming to the market. And it appears, demand is fairly okay. How would you approach both these two names? Indus Towers first up, because that could see some passive flows. And what about Vodafone Idea in the last few sessions? That's moved to nearly 17 rupees.
Yeah, Nigel, good morning. As I see it, I think it could be a win-win for both. On one side, I think for Indus Towers, I think you might be seeing an inflow of around 800 to 900 crore worth of funds into the passive funds through the allocation under FTSE or MSCI. And that is where probably I think likely to attract a higher amount of inflows into Indus Tower. On the other side, I think Vodafone getting this money into the fold, probably which is significantly large sum of money, it could go into the Vodafone Idea eventually. That is what I think the take would be. And that is where I think the opportunity should be for Vodafone Idea to ultimately, I think, get liquidity, which they otherwise, I think, always wanted to have. So, all in all perspective, I think this particular deal appears to be, I think, positive. As said, the market is ready to absorb the deal size of 9,000 odd crores. So, certainly, I think this should remain positive as far as the market activity is concerned.
Okay, the other stock that I wanted to discuss with you, Devin, hi, good morning, is Zomato. Because we've had a lot of brokerages with positive views after Zomato. There are discussions that Zomato will be acquiring Paytm's ticketing business. And a lot of people believe that it's a positive for Zomato's going out business, right? I mean, it's a value add for them. At this price, is the risk reward still favorable there?
Hi, Sonia. Good morning. Well, I believe that I think there is a business model that is in making. And at this point of time, I think one would not like to talk about the reward mechanism. However, I think as the case may be, I think the Zomato is trying to build every such kind of hook as possible to get, I think, the customers hooked onto them. This could be one more business, I think, the entertainment segment of activity. And they floated a separate subsidiary company for that particular purpose. So it remains to be seen how exactly I think they want to shape up this particular business model. But as I believe that I think once you acquire the customer, you create enough number of hooks for those customers to stay on with the business model. And that's what this company is doing. Whether immediately it would be a reward making proposition or generating an additional amount of revenue for the company, I think only at this point of time for me to comment upon.
Okay. Got it. Devin, hi. Great to be speaking with you this morning. I just want to get your thoughts on the intense block action that we're seeing in the market, right? I mean, whether it's new QIPs being launched or whether it's existing investors selling out. It's just very hectic activity. I mean, in case you have any thoughts, just tell us, because one of the biggest stories this morning is that we might see a major sale by Vodafone PLC from Indus Towers. Then there's Gland Pharma, where again the parent, which is the global parent, Fosun, they could be selling a bit of their stake. So any thoughts on some of these major trades and the underlying companies, of course?
Yes, Sophie. Good morning. Well, I believe that I think it is this market which is giving an opportunity to most of the promoters. And today, I think the promoters are getting this opportunity largely also because of the fact that most of these companies are now putting at a valuation which is far more richer than what one would have imagined or asked for. I think without going into specific of any company's name, I think in some of the companies' cases, I think the valuations are putting it around 100 times, 150 times in some of the cases. In such case, I think why would not this promoter cash out and take money back home? Either they would invest back into the business or may do the restructuring on the balance sheet side. Whichever way you look at it, I think the companies are basically, I think, taking the advantage of the market situation. At times you wonder, I think, how each this valuation can go up to because of the liquidity factor, which is playing a major role today in the market. But nonetheless, I think most important part, I think majority of the companies are putting money back into the business. And that is where probably I think there is an reasonably high amount of optimism, where I think the businesses are attracting quality of funds. And that is where probably I think you could see the sustained growth continuing in some of the basic companies. Of course, I think I'm not naming those companies for the sake of, I think, keeping that particular aspect aside. But I believe that I think this is going to be fundamentally very strong phase, I think, for many of the companies capitalizing on this market move.
Sure. Devin, just specifically on Vodafone, if you could come in over there, I mean, all things put together, the stock actually has doubled in the last 1 year. So if someone was willing to take the risk and get in at those levels of 6-7 rupees, I mean, they're already probably feeling pretty good about it. But what from here on? Because again, if this block goes through, then, I mean, there are marquee names that could be getting in. A lot of mutual funds are getting in. So what's your sense? Would you buy into Vodafone purely on fundamentals at these levels?
So purely on fundamentals, I think it's a huge amount of struggle which is on as far as I think this company is concerned. On one side, they are putting up a significant amount of investment again into 4G, only to retain the existing 2G customers, migrating them into 4G, and with the hope that I think they will start giving them a better amount of realization ARPU, which is comparatively lower compared to other two in the industry. So on one side, I think that is the game. Second side, the 5G rollout has to take place. Again, it requires capital. This company would be capital hungry as far as I think their roadmap to growth is concerned. In next 3 to 5 years, we are likely to see significant amount of capital raised by this company from whichever count. Either they capitalize the creditors, the vendors, or they would probably bring in fresh money as promoters, or I think investors putting in additional amount of money, but significant amount of capitalization process will continue if this company has to come back to level at which I think the peers are. In my viewpoint, I think since they are into a good capital investment phase, I think the story would be strong. However, the performance eventually will come, but one will have to wait for the performance to come.
Okay, all right. Devin, stay on. We'll come back to you in a bit.
Your thoughts on either of these companies, Nazara or Delta?
Not really, Surabhi. I think I haven't gone into the details in this question.
Okay.
Okay, all right. That is on Nazara and Delta. But I wanted, your thoughts on some of the larger stocks, right? There was strong support that we got from the bank Nifty yesterday. In fact, some of the laggards like HDFC Bank, there is a narrative that, now these companies may start to outperform. Is that your base case scenario as well? And what do you do with the banking stocks? Which are your favorites now?
Indeed, actually, I think I'm completely surprised with this particular market. I think they're ignoring the quality. Some of the fundamentally strong companies, including you mentioned banks, I think you have two largest banks, SBI and HDFC Bank. Both of these banks are available at a valuation which is far more comfortable liquidity. On one side, you have got significant amount of inflow of money coming from investors. On the other side, I think these companies having a significant amount of large potential, I think they're still languishing on the valuations. So at times, I think you're confused whether the market wants quality or only wants momentum. At this point of time, the momentum is certainly not with them. I think HDFC Bank and SBI have relatively gained after 4th June fall. But the fact remains that I think the other counters in the market, they are significantly gaining the momentum. I would be one, I think, who would stay with the quality. I believe that I think the likes of SBI, which is basically growing at the current rate of growth of around 16-18% on AUM side, could probably double in 4.5 years' time as far as their AUM size is concerned. And that's where I think the size of SBI could be, I think, really meaningful going forward, even for that matter, HDFC. According to me, I think given the growth rate that we are experiencing in the economy, the banking space in particular, and I think these larger banks, HDFC, I think SBI, I think could probably have relatively much larger role to play. So one would remain invested with these companies, even though I think the return rate is slightly lower compared to the market rate of return.
Okay, all right. Devin, request you to stay with us. Yesterday there were quite a
Monsoon situation. Devin Choksi is still with us. Devin, many of these stocks, rural-focused names, have come back into action in a big way, right? Not just the auto guys like M&M, but across the board. In the FMCG space, I wanted your thoughts. If the monsoons progress well, are there any stocks in that basket that you like?
So the good part of, I think, most of the FMCG companies that I think they've connected themselves very well with the tier 2, tier 3 cities and beyond. I think the distribution reach point of view. Likes of HUL and even for that matter, Britannia, they actually, I think, started putting across higher amount of demand prediction model from the rural spaces of respective products within their basket. So that is where probably I think one remains extremely confident that going forward, two important changes are happening. On one side, demand generation is happening from the rural segment. On the other side, these companies have corrected their manufacturing processes to meet the demand which is actual on the ground. So to a greater extent, I think it results into higher amount of profit margin for them. And given the stability of the input cost, I believe that I think most of these companies should be doing well, be it in personal care or be it in food segment. I believe that the companies are likely to do well. We continue to like the story behind Nestle. We continue to like story in HUL. And though the moderate rate of growth, but I think these companies would continue to do well along with companies like Britannia. That is what our take is in this basket.
Okay, we'll do one thing. We'll take a quick break on that note. We have